Howdy, howdy, folks. Good evening. We're about to cover everything that's going on in the market to our best knowledge. And I've got an incredible guest with me this evening. He is hopping in bright and early. Love it, love it. See if we can get him in here and get some good connection going. Beast,
Hey, what's
how
going
are
on?
you?
Doing all right, doing okay.
Oh, dude, we're already having lag. Oh, no.
Oh, give me a second.
We're lagging a little already.
We good? I think we're good.
Yep, I think we're good now.
Sweet.
I
Let's
think
get
we're good. All right. First of all, guys, I want to thank this beautiful young gentleman. Thank you so much for your time, Rohan. I always appreciate getting to sit down and talk to you. You are such a comprehensively intelligent individual, and I learn something every time I get to sit down and talk to you. So if you could provide just a little bit of a background on you, even though we've had so many calls together, I would still love to make sure you're well introduced before we get started.
Really appreciate it, man. Dude, honestly, you say all these nice things about me, but I feel the same way about you, man. I feel like every single time we sit down and have a conversation, there's something intellectual always to be said. We always discuss like current events, how the trading strategies are going, which I hear are going quite well for you. And OBR investing, by the way, not a paid sponsorship. Um, anyways, like I just feel like overall, it's just great to talk to you all the time. So anyways, a little bit about what I do. So currently, I am a trade life cycle analyst at JP Morgan. And without getting too deep into what I do, it's a job. I like it. It's fun. I'm in this space. I get to see exactly what goes on a given day. It's just a very fun and rewarding experience, especially for an entry level job out of college. I'm from Pennsylvania, and just doing my thing.
Well, thank you for that very much. And I'll just give a small background on me. Guys, I've got a programming background, cybersecurity background, a whole corporate finance background, financial planning, estate planning, asset management. I've done a lot. And I had to do a lot because I dropped out of college, so I had to learn somewhere. So now I do capital growth. I do venture capital, do algorithmic trading, both in crypto and United States equity market, United States stock market. And then I do as a trader, I am all calculations based. And I find those calculations via averages through TA. And my bad boys that I trade the major ETFs. I'm one of the only people that I know that constantly and only leverages on I'm on a long-term basis. I am almost always in, if not always in, ETFs with leverage. So it's either I might take me out some margin, who knows? But the leverage I'm referring to is options, right? Credit spreads, leaps, etc. So that's what I work in the stock market full time, and all of my companies that I both own and am partnered with, everything's surrounded around the stock market. My capital growth company, VC companies, my consulting firms, algorithmic trading, whole nine yards, everything, and OBR. So that's me. That's a little bit about me. But tonight, what we are talking about, what we are covering, and hopefully in its entirety, is the current market condition. Everything that's going on, what's factored in, what's not factored in, what are the imminent catalysts that we should be looking at? What are we not considering? What have we considered? Rohan, I'm going to open up the floor to you. Get us ripping hot.
Sure thing. And I'm sure you guys have seen by either the status of your portfolio or through the headlines how absolutely volatile the markets have been as of recent. Last night, we saw futures rise as high as 1.3 or 1.4% for the NASDAQ. And, ended up today closing down almost 1.5%, 2%. I was talking to one of my good friends, and he was saying, this reminds him a lot of when we first experienced the COVID crash way back when, about a year and a half ago, right? So it's starting to become a little bit more volatile in that sense. Obviously all of that is being sparked by this new Omicron variant. A couple of people in South Africa start coughing, and all of a sudden our markets and finances are crashing. Who knows? But all we do know is that there are certain ways that you can hedge yourself against the market. There are actually tested and tried ways that you can hedge yourself against the market. And in doing so, you provide yourself with some stability. You provide yourself with some solid resources that you can employ yourself, right? So in that sense, I think it's really, really important to look at what's going on in current events. And overall, I mean, once you're aware of what's going on and how it's being conducted, you're able to conduct more of a better analysis for yourself. What do you think about that, Clayton?
Well, I agree with literally almost just about everything that comes out of your mouth. You and I think very similarly, and you covered a lot there specifically. So there's so many things that I want to respond to, but I'm gonna, instead of responding necessarily, I'm gonna throw something your way that's been on my
Absolutely.
a little bit. So first of all, guys, there. Sorry, the comment just got me.
Yep, me too.
I'm sorry, I wasn't ready for that. Massive life, I got you. So for guys, just think about this. All right, think about this. We've got two things, and then I'm going to ask you this question, Rohan, because I'm very
Absolutely.
in your opinion. And I'm sorry to go off, but I've got to. I got to ask you this. I got to hear what you got to say. So September we fell. September, historically red month for a multitude of reasons, right? P&Ls on the mutual funds, whole bunch of other reasons. And this time around, the news was complaining and crying about the debt ceiling. And has the U.S. ever defaulted on the debt? No. All right. So quit saying, that the world's going to end. Excuse me. I'm sorry. So world's not ending. All right. We're all good. But we had what was the percent pullback, Rohan, from 454 down to the mid 420s, right?
Yeah. So from the top in September, on September 3rd, all the way down to October 4th, it went down to 428.64, around 4.3%, just about.
Okay.
Yeah.
So for the total pullback, to my knowledge, was what was the floor price before we started the uptrend again?
Yeah, so from there all the way back to all-time highs, that price is 428.64. So from there around 428, we went all the way up to around 470, give or take.
Okay. So just some quick math here. I'm taking 428 and I'm dividing it by the previous all-time highs in that time frame, which was 454 and a half, I believe.
Yep.
All right. So we had a from my bad math. It was a 5.9% pullback, almost a 6% pullback. Guys, the reason why I bring that up is because we haven't even heard anything yet about what's going on with the interest rates. It's still up in the air whether they're going to pull the interest rates up incrementally starting in December, or if we're going to keep the current schedule that Jay Powell said he wants to keep and move that out to this summer.
A legend.
And that's going to be our first incremental increase. So that being said, we're already at 4.9% down, 4.9% down. And the majority of that's allocated to the general fear that the media is creating in the market because of the new variants. We get a new variant every week now. So that being said, the media is doing a great job of fear mongering and making sure everybody's scared, poopless about the COVID variants and everything, and make sure everybody's masked up and staying inside. So that being said, here's my question for you, Rohan.
Sure.
Considering this, do you think the big banks and the institutions are pulling the market down prior to the 14th and 15th meeting so that Jay Powell can come in and comfortably say we are not raising rates until the summer of 2022, and we elongate the bull run from about, let's say, maybe 6 to 8% down following this 4.9% pullback in SPY? Do you think that's going to be the case?
So first of all, I see where you're coming from. I can't, for a fact say that that's possible. It's possible. Of course, anything is really possible. But when it comes down to it, I mean, it's just speculation, right? Like I wouldn't really, engage in that. Of course, there's a lot of volatility as of recently, just based on just market conditions and how everything's going on, right? But as far as, pulling the market back in terms of like large financial institutions, I mean, like once once SPY hits 450 or around that level, there are going to be people that are looking to take profits, namely institutions. There are brokers that are exchanging hands, for certain clients, large name clients across Wall Street that, either are short on some equities or either are long on some equities. Obviously, at some point, people have to take profits, right? So when that happens, the large market makers, either intentionally or unintentionally make that happen. And then what it does, it does intrinsically create another fact, of the matter for Jay Powell to go back and say, hey, we're not doing this, we're not doing that, and we're gonna, raise the debt ceiling. I do know, however, that there's a meeting about this. What is this? In 2 days, right? In 2 days, on December 3rd, they're going to have a, what is it? I have it right here in front of my screen. It's a fiscal deadline on Friday the 3rd, and
Right.
on the 15th, I think Secretary Yellen is going to have a meeting to discuss, about future funding and whether or not they're going to default. Obviously, they're not. I mean, at the end of the day, it's really just a playing a record on repeat. And I'm sorry if that was a really long-winded answer to that question, but yeah, it's just what I think. Just to answer your overall question, I think it's a little bit too much speculation for me.
Okay. All right. That's fine. No, I greatly appreciate and respect your opinion as always. And I wanted to hear what you had to say, right? That's why I asked you. So I
100%.
really appreciate that. So that was an excellent response in my opinion. I started getting very theoretical and conspiratorial about what the market movers and
Dude, don't we all? Like,
right? Yeah. I just try to protect myself. Guys, I said in the beginning of this call, I'm a calculations-based trader. So I'm covered with my trading strategy down to a 50% fall on the market, allocated all the way down there. My largest allocation is in the latter half of that, so the 30 to 50%, just because I'm very, very much conservative and I want to be as crash-proof as possible. I go very long term, and even with that model, at the end of it, fully deployed, I still have 30% cash left. So I have to think about these things when we start having these larger market moves. When SPY falls, today it fell quite a bit, right?
it did.
The ETFs are what I'm constantly stocking. So when moves like this happen, I need to think to myself, okay, I need some information here. What's going on? What are the catalysts involved? What is the Fed considering? And the majority of the information I get, guys, to keep this real simple, is from Thinkorswim. Seriously.
I think there was a question in here a little bit earlier, and I don't mean to get into questions, too early, but, can you I think the question was, without scrolling all the way up, is, can you teach us how to employ some strategies to save yourself from, like, COVID-like crashes? The answer is, it's not a cookie cutter, portfolio, right? It's not a one size fits all sort of thing. Everybody has to have their own risk tolerance. Everybody has to put down a certain amount of money that they're going to hedge per se. And in that sense, that hedge can be really anything, right? If you are a big person on investing in REITs or real estate or commercial real estate, any alternative investments, there are many opportunities for you and people that you care about to invest in certain properties. And I'm not just saying you go ahead and put an entire down payment on a house. Some people can't, like myself, I can't even afford that, right? So when it comes down to it, what you really got to do is reach out to a couple of people, maybe be a partner in some real estate, right? Have some cash flow coming in. That way, if the markets dip like that, you're not, out of liquidity. You actually have some cash flow coming in. That's one way. Another way to do that, and obviously there's probably millions of ways, like literally, there's probably millions of hypothetical ways that you can go ahead and hedge yourself in this market. But that's one. Buy gold. I don't know, physical gold. And what are some hedges that you know of?
Well, one of the biggest hedge right now is I just managing everything that I manage. And I say this to a lot of people, even though inflation's going up, if you know how to deploy and utilize your capital, cash is an absolute position, right? For me, after SPY broke all-time highs at 454, flew all the way up to 470, I was sitting at 50 to 55% cash in my long-term and comprehensively in my portfolios,
Yeah,
which for me, I know it's not going to sit there for very long because the market's
100%.
going to have another pullback and I'm going to be able to deploy that. I also another topic that I'd love to bring up and love to hear your opinion on that,
Sure.
that directly correlates to this is the difference between diversification and concentration. For example,
Okay.
the why I'm bringing this up is due to our incredible crypto side of OBR,
Okay. Yeah.
I've really started allocating money into crypto, and I just have a very broad, calculated model for averaging into the coins that I want. I hold Ethereum right now, a large position in Ethereum, and then Cardano, and then Nano, another plugged out by one of the fan favorites from OBR. So
Absolutely.
that being said, in my opinion, there are 3 assets in my crypto portfolio. So in my opinion, that's concentrated. But I'm also getting into real estate soon, and I'm
Nice.
also in the stock market, and I also own multiple businesses. So my income and my work is diversified, but I'm extremely concentrated, in my opinion, in those different elements. What do you think about those two?
So I think, what you're saying makes absolute sense, right? Having diversification in your portfolio across many different investments is the way to go, right? You buy, like, let's say, for example, you buy 100 shares of Apple, and all of a sudden Apple, I mean, obviously this is probably not going to happen, but Apple has a down year, like let's say 10 or 15%, and all your money's stuck there. You really can't sell, because why would you have paper hands in this portfolio, in this market? But I mean, spread the risk across many different investments, and intrinsically doing that, you minimize your risk exposure and tolerance to the market, right? Overall, let's say, for example, it could be crypto, it could be REITs, it could be stocks and, and ETFs. It could be like any, like bonds, right? You can have any mix of financial derivatives as long as you're mixing it up. There really isn't a way that you can lose over time. There's a statistic. The only reason why I say that you can't lose is with a 99.99 actually percent certainty, is that there's a study done by Vanguard, and I think I just recently posted about something like this, right? If you're in the market, if you buy like an S&P 500 ETF or something like that and hold it for, what is it, 20 years, 25 years, the probability that you lose money is 0.01%. The probability that you make money is 99.99%. And I feel like that's something that people should know. And think about that every single time that you're about to go and sell a stock, right? Like, don't do that, right? Because it, not only are you putting yourself in a disadvantaged tax position, you're putting yourself at a disadvantage in general to other people. Like, I think, like, overall, I mean, not I think, I know that if you hold positions long term, there is no way, like, 0.01% chance. Who the hell wouldn't take those odds, right? There's a 0.01% chance that you'll lose overall. So I think I just completely strayed away from the topic, but long-term hold.
There you go. So, well, no, you brought up a couple of things that also directly correlate, like I said before. So, something that you brought up that's very interesting to me is something that a lot of new traders and a lot of new investors deal with, right? They will get very concentrated. And for example, let's say they have a $10,000 portfolio, and let's say they bought $5,000 worth of Tesla, right?
Okay.
At a dip. And they're thinking to themselves, okay, I'm up 20% on Tesla, which is no abstract number for Tesla whatsoever.
Right.
I'm up 20%. Okay, do I sell? Well, here's the thing. You got 2 questions. Do you need that capital immediately? And did you over leverage, which is why you're now questioning your original thesis and your original conviction?
Absolutely.
That goes into real estate with buying and flipping homes. That goes into crypto with over allocating because, oh my goodness, crypto's breaking all-time highs. Let me catch the bull run. Well, you missed the whole bull run because it started at $29,000 for Bitcoin, and it
Yeah.
started at $1,800 for Ethereum or whatever the number was. So you're quite a bit late, right? But that being said, you have to look at whether or not you're over allocating, under allocating. What's your risk reward? What you're going to do if the trade or investment goes against you. Can
100%.
you take a full loss on the position? Do you have to have stop losses? Do you have to have stop losses on crypto, etc.? So that being said, that goes into concentration and
Yep.
diversification for me. Because
Absolutely.
for example, my crypto, I have 5 or 6 ETFs that I trade. Now the allocation is very much heavily into SPY in comparison, but I have 5 ETFs that I trade, and I have 6 to 8 individual securities that I will own, buy, sell, trade, and hold long term. So that, in my opinion, fairly concentrated. But I look over to my, and also diverse in the eyes of some people who have, just Tesla and Bitcoin. And then I
Not
go over to my crypto,
diversification by any means, no.
but they're still doing well. They're outperforming me.
I
So,
mean, come
so
on.
relatively speaking.
Okay.
So, and then for my crypto portfolio, I'm 70% Ethereum, I'm 25% Nano, and I'm 5% Cardano, right? In my head, in the stock market, I would not be doing that. Nope, I would not. Nope, absolutely not. So it's very different. And what I'm bringing up is kind of the educational side of what you can be concentrated on and have conviction behind, which you have to develop yourself. And then what it is, what's best to diversify into, but then be, concentrated in your diversification.
Definitely.
So I mean, Rohan, what do you think about that?
Yeah, no, and I feel like we can definitely, close out the question by saying overall, having that diversification in place definitely reduces your exposure to, the market. And if for one individual equity overall, if you're doing that, you put yourself in the right boat. If you long-term hold, you're putting yourself in a better boat. And overall, just employing these strategies that you come up with. And like I said before, right, it's not a cookie cutter thing. It's not a one size fits all thing. It's definitely something that you have to figure out as you go through your progressions.
Right. No, and the reason why I wanted to spend some time answering this question is because the answer to this question from both of us folks has absolutely everything to do with our current market conditions. If you guys are worried that we could have another 2008 because of the interest rates or because of inflation or because of the over expenditure of our current administration, I'm not going to get into that, then you guys, this is a great way to make sure that you're out. This could be a time where the stock market falls and crypto rises, right? Ethereum, and to my knowledge today, did very well. I was up quite a bit, but the stock market, what was down 3% or something today or 2% today. It was a big pullback. So that being said, you guys can hedge yourself by diversifying in different asset classes, but you can still, David, hey Beast, David's a good friend of mine, good old friend of mine. History does always repeats itself, and how I trade is based on empirical data, historical data. So that being said, guys, a way that you can diversify yourself in this current market, in this current instability, if you will, is by being in different asset classes. And guys, if the first question you have for me is, hey, Clayton, I don't have the capital to diversify in different asset classes. Well, then you need to develop conviction and concentration into one asset class so that you do relatively well or lightly diversify it. For example, when I started, I was in one or two different securities and one cryptocurrency when I started. And I just worked as much as I possibly could to get as much capital into those avenues as possible. One of those was Tesla. I had some Apple. Then I got out and got into AMD. I got into some growth cap stocks. And then I've traded Litecoin, Bitcash, different cryptocurrencies. I've been all over the crypto market. But I realized as a long-term trader and a long-term investor for all of these things, averaging down is king. Averaging down is king, and averaging up is also king.
Do you want to switch gears here? I think we have a question about financial technology. I know you really like fintech.
Absolutely, Beast. Go ahead.
All right. So we have from Pshroff7 saying, in a financial tech-ish sector, Visa, Affirm, and Square today. Thoughts on this sector? Seems like a nice three-headed animal play.
Well, here's what I'll say, Rohan, then I'm going to let you go off because I've been talking
Go for it.
The fintech sector, in my opinion, is one of the largest competitors to the banks and the major institutions.
For sure.
One of the largest competitors. So that creates one of the largest jousting matches on Wall Street, in my opinion, because the fintech companies are really, and Rohan, I'd love to hear your opinion on this. The fintech companies are really trying to take as much talent from Wall Street
Absolutely
as possible. And that being said, how does Wall Street respond to something like that? Well, they load up their short game and they run them to the ground. And that's how they do it. And that's history repeating itself. So, Rohan, I would love to hear what you have to say about this. I don't want to go on a
Yeah,
rant.
there's plenty of historical implications here as well, right? Look at what happened in 2001 with the dot-com bubble crash. That's all technology companies that are getting hit massively, and banks are doing, merely okay. But overall, like you said, right, history always repeats itself. I think that this fintech play is really interesting. I think that overall, the way that these companies are diversifying themselves by spreading into different areas, like for example, look at Square, right? They're doing some crypto thing with them, like cashback and crypto. They're definitely playing to the current trends, which is great for them, right? They're definitely appealing to the younger generation by showing them alternatives to hold money, alternatives to investments, alternatives to the traditional banking system, and it's definitely working in a sense, right? I just recently finished a learning on Coinbase, right, which is also a huge company in the fintech space. It's all about, like you can get like free money on Coinbase, by the way, not a paid sponsorship by any means. I wish, but what you can do is you can take quizzes to earn money and learn about these certain cryptos. And basically, their entire selling pitch is our crypto is innovative, and the traditional banking system is outdated. Essentially, is what they're getting at. But overall, I just think, in terms of how this space is playing out, it's really cool to see how the future is going to play out. And you said it's like pretty much one big jousting match, right? You see a lot of these fintech companies, like look at Upstart. Affirm has been making headlines recently. Square. All these companies are down quite significantly from the highs, right? PayPal, like all these companies are absolutely, I wouldn't say a good buying position. I would say that they look good. I would say that they look good. That's all.
And I'm very much long-term on Square and PayPal. I haven't gotten much into Affirm. I've traded Coinbase quite a bit before I stopped trading individual securities. And Coinbase has an incredible amount of
Oh my
potential.
gosh.
An incredible amount of potential. So I think we're at a good time. Unless there's anything else you'd like to cover, then we could take some questions before we head off for the night.
Yeah, let's take some questions. I think we covered it all.
Okay. First question, beat us to it as I was even saying it. What about Lucid? What about Lucid? I've got a Lucid hat over there. It's not in.
Oh, you do? What the
Unfortunately,
heck, man?
Unfortunately, my Lucid hat is not in front of me, or I would put it on.
Oh my
But
god.
rocking good old OBR. I've got a Lucid T-shirt, the most expensive T-shirt I've ever bought in my entire life, by the way.
Jesus, no way.
Yeah, it was a $60
What the
T-shirt.
hell?
I had to look at myself and
Yeah,
just
I gotta
go,
get that in my life.
worth
I'll
it.
rock that 24/7. What the hell?
I literally haven't bought a T-shirt over $5, and then I hit that, and I was just thinking to myself, ugh. So Lucid, you got to understand, Lucid has a very long way to go, in my opinion, to earn its market cap. It's got a long way to go. I've been in the Lucid Air, and by goodness, that car is gorgeous. The display, beautiful. I loved everything about the car. The duration of the battery is excellent to my knowledge. Everything's good long term. But with Lucid, you have to have a long-term outlook. If you guys are asking me about Lucid because Lucid went up $30 a share thereabout in the past month or two, we're not having the same conversation, right? We're not having the same conversation unless you were scaling out of long-term positions because you believe in the company long-term. So any thoughts on that, Rohan?
Yeah, I think Lucid definitely has potential, right? You saw what happened with the EV market as Rivian launched its IPO. It was definitely interesting to see how that entire sector has taken off in recent, times, because Tesla really set the benchmark. Tesla really showed the entire world that an EV company, an EV startup, can really hit the ground running, so to say, and can really charge up some gains, right? So overall, I like Lucid. I like its business model. I like the fact that it's catering to a luxury audience. I like the fact that they can make high margins on their vehicle. I also like the fact, I actually don't like the fact that they haven't, launched any selling or anything like that. They haven't really sold any vehicles yet, but they're starting to pick up with the pre-orders and stuff like that too. So yeah, Lucid, great, long term. I think we
All
have a
right.
really well thought out question here. And this is definitely for you, as you'd probably know more about this than I do. As volatility picks up and stock prices drop, are you guys deploying sell puts options to eat up the IV or get stocks at even bigger discounts?
So I want the question above that asked me if we trade SPX.
I see. Yeah.
Trade SPX. I don't think you do either, right? Or
No,
so to answer the question that Rohan just read, which is a phenomenal question.
it is.
Everything that I do is very calculation based, including my individual security purchases and averaging into my long-term security positions like AMD, Tesla, Apple, etc., a whole bunch of stuff. So that being said, no, I actually don't like selling puts. I do like selling calls for covered calls. So for example, the other day when AMD was breaking out and breaking into all-time highs, I sold June of 2022 200 calls against my AMD and got a lot of premium. Mind you, that AMD position I've had since $102 a share, which was in September, by the way. So that position specifically, if I sell it in June for $200 a share, I will make almost 100% return on my investment in less than a year. Which for me, as a long-term trader, portfolio manager, that is phenomenal on any security. So that being said, and I got something like $1,500 in premium just up front. That was just a little small payday, right? It was just for 100 shares of AMD. So that's great. I do not like selling puts, long story short, because I can't control it. Now, I can close the trade at any point in time, but my calculation-based trading tells me, okay, AMD's at the percent down that you need it to be to get your average cost X, Y, and Z. Go ahead. And I have all those calculations out for me, so I don't need to sell puts. I can just buy in when I want to. Whenever the market's showing it, and I've got alerts set for pre-market, post-market for equity. So whenever the price is there and whenever the price is right, I'm into play. So that's how I handle it. That's why I don't sell puts. That's a great question, though.
Yeah, I'm not an options trader by any means, so I can't really, speak to that. I'm more like, with the mindset that you should be buying a long-term stock and hold type of thing. There's obviously there's different agendas, there's different risk tolerances, and yeah, I think Clayton, you answered that question quite well, and that was also a brilliant question by Pew Schroff.
I agree. I'm going to answer this very quickly. Lucid versus Tesla. You're comparing a baby. You're comparing a baby to an absolute monstrosity of a company, and I absolutely won't even acknowledge the comparison. I'm telling you right now, by the time Lucid gets to Tesla's level, Tesla will be 10x what it was.
Yeah.
And it's just because they have different starting points, different capital, different backing, different models.
Different business model, honestly, right?
The only thing, in my opinion, that's the same is that they're both electric vehicle companies, and Tesla's not just an electric vehicle company.
It's an energy company, man.
Right.
It's a company that sells carbon credits.
There's a lot. Okay, so David, I assume you were asking about how does Lucid compare to its competitors. So, Rohan, you might have a different opinion on this, but the only two EV companies that I've looked at, three EV companies that I've looked at are NIO, Lucid, and Tesla. And I only currently hold Tesla. So the only thing I've been focusing on is my Tesla position and what they're doing in the future. So in regards to how everything stacks up to Tesla, just based on my allocation and my holding, nothing.
What is up, Connor? Man, long time. Jeez. Anyways, yeah, EV companies wise, I mean, why not throw an underrated name into there? Apple. Right? So I know a lot of us hold Apple, right? It's a staple in a lot of people's portfolio, the blue chip stock of the decade, all that other good stuff. Have you seen how Apple has been performing on speculation that they're going to be releasing an EV car? Like, they have been absolutely going insane, bonkers, ridiculous, redonkulous. Any word that you can really think of, they have been going. Instead of terrible, because they're reaching all-time highs almost every single day. And it's great to see for, such a large company that it is, to add tens of billions of dollars to its valuation every single day. And it's doing that on a consistent basis. You can tell that institutions are really buying into the fact that EV is in the future for Apple. So when it does, it will be quite the disruption, in my opinion.
All I have to say to that is not only do I agree, but I'll show you why, or I'll tell you why. Think about it this way, guys. Let's bring logic into this for half a second. How can one of the largest market caps in the stock market not have enough money to throw at something until they get a good product?
Oh, 100%. Oh, come on. That's a gimme.
I've said my piece. So just a real quick question. Will this be recorded to rewatch? Every video that I've done with this gentleman and others are all in the IG Live section, IGTV section of OBR Investing. These are recorded and I post them as soon as we are done with the call. So we'll take a couple more questions. Let me see if there's anything else for us to answer. Scroll down a little bit. There's always a risk of assignment also in selling puts. Right, exactly. That's why I don't sell them. I don't want to get assigned, necessarily at a position that I don't want to get filled at. But
No, for sure.
I could go in, just looking at a longer term strategy. I could say, okay, hey, maybe AMD falls 30%. And I look 6 or 7 months out, could get a lot of premium for that. And if it does happen to, but the problem is when I sell that, I have to make sure that I keep, that in by that time period, let's say I sell a $130 put for AMD. That means I have to have $13,000 in cash by the time that put could expire. And if it's nowhere near it, then I don't necessarily need to worry about it. But I don't like that. It's just there's what I do want to manage and what I don't want to manage. That's something I don't want to manage.
We have a question from Tahadura 7. Best stocks to get into right now. I'm going to answer that like really generically. Look around you. What phone are you using? What laptop do you have? Right? What platform are you on currently watching this live? Is it employed by what company? Do you use Snapchat? I don't know. What car do you drive? Right? So investing is everywhere around us. What are the best stocks to get into? The stocks that everyone use. The companies that people buy products from is the best stocks to get into at any time, right? At any time.
I think that's incredible. I like to make it very simple. And my money's where my mouth is, so this is what my mouth's going to say. All right, my largest positions are Tesla, Apple, AMD, NVIDIA, ETFs, Vanguard, SPY, QQQ, TQQ. So that being said, that's what I like. I love the semiconductors because that's what I know best about. And my conviction for what the semiconductors will be capable of doing in the future, unwavering. Unwavering. If you guys think about it, think about what Rohan just said. Your computer, your phone, your car, your electric vehicle, semiconductor.
Oh, yeah.
Right?
Also the inputs. Rather than the product, also look at the inputs. That's a brilliant point.
Yeah. There you go. So let me see if we've got anything else before we wrap up. Thoughts on Sandbox Meta? Competent and fluent conversation in that world. I'm still learning about the only thing that I've actually contributed to it is I'm looking at NFTs. I'm looking at different cryptos that correlate, and I also just bought a decent chunk of the Meta ETF, which is what Facebook was trying to get, and Zuckerberg lost that one. So I'm in the Meta ETF, quite a bit of it. I love it. If it falls, I'm going to buy more of it. No problem. The holdings of Meta are incredible, but I have not yet diversified my time, attention, and personal education to the metaverse a whole lot, or the cryptocurrencies and NFTs and whole 9 yards that are correlated to them.
I think we have a comment. SOXL is a really good ETF for the semis. It's a leveraged 3x ETF. Obviously, investing in leverage, as you all know, comes with its risks. But, if you're bullish on a certain sector over time, shouldn't be no problem, right?
Yep.
Hey, you're getting a lot of love from you guys.
Yep. Thank you guys for everybody who's saying hey to Clayton. I appreciate that. And then Jay Dunn's
Listen,
in
I'm
here.
bullish on OBR too. I'm just gonna throw that out there.
I'm bullish on Jay Dunn as a human being.
I'm bullish on Clayton, freaking beast of a human being.
Bro. I appreciate that.
What the
All right.
hell
So let
happened
me
to
see.
social stocks like Facebook, Snap, Twitter, and Zoom? Let's look at Zoom. Work from home, right? I mean,
Okay, done, baby. Sorry.
it's just like a ping pong match, right? It's like a ping pong match that's happening back and forth. Literally, you see President Biden saying, "Oh, we have nothing to fear about, the Omicron variant." Oh, work from home stocks dip down. Oh, we have the first U.S. case of the Omicron. Stocks go right back up. Oh my God, wait a second. There's so much volatility in the market. So that work from home sort of aspect is literally getting played down a little bit too much. Twitter, what happened was Jack Dorsey, at least contributing to the recent losses, Jack Dorsey stepped down from CEO to focus more time on his personal things or whatever. So yeah, I mean, every time there's a shift in leadership in a company, there is some skepticism that comes with the stock and shareholders. Yeah, social stocks are beaten down. Look at it as an opportunity.
I couldn't agree more. There's nothing I have to add to that. Covered perfectly. All right. So, okay. Guys, thank you all so much for joining us today. I really, really appreciate you all staying around and providing your input and asking some absolutely brilliant questions. Thank you so, so much. The reason why we get together in these live calls is because we want to provide you as much open-ended thought and time to ask questions so we can stimulate an incredibly beneficial and productive conversation. That's why we run these, and that's why Rohan's one of my favorite to have on these calls. So, Rohan, thank you so much. Thank you so much for your time, and thank you guys for all joining. Rohan, I'll leave you with the last piece.
Yeah, thank you guys for sticking around, all 40, 50 of you guys that stuck around the entire way through. Really appreciate it. Hope you guys have an amazing week. And thank you, of course. And my largest thank you goes to Clayton and the OBR team for hosting this live. It's great. I love these guys. They're some brilliant people. And this is to throw off anybody who says it's a scam. Fuck that. And excuse my French, right? OBR is a platform where people get together to share a common love, share a common interest, and that's investing. And that's investing in equities for the long term. And I stand by it. So
I appreciate that very much. I would never associate myself with a company or group of people that I did not trust and did not greatly appreciate and have an unbelievable amount of respect for. And OBR was something that took me all of 3 weeks to very much understand the internal dynamic of. And now I participate in quite a bit with OBR, and I love every square inch of it. So guys, if you're not OBR, hit the link in the bio, hop in the Discord, start your free trial, get in the live call, talk to me every single day. I'm in there, pick my brain, start productive conversation, and you're going to have a home and a place and a family with us and at OBR. So we very much appreciate all you all for joining.
much love to everyone. Shout out Neil, Parth, Siobhan. Love you guys. Bye.
There you go. Take care, guys.
That's it.